Hey, good morning, everybody. This is Ryan Moe filling in for Joe Vaklovic. It's Thursday, June 26th at 5:23 a.m. We're getting just a moderate bounce here in the grain markets today. July corn's up just about 3 cents. Dees corn's up about 2.5. We've got November soybeans up 2.5 as well. When we look over at the wheat markets, Chicago wheat's up about 2. We got the Minneapolis contract. It's only up about 0.5. Kansas City wheat tagging along with Chicago right there, up around 2.5 to 3 cents in the December. Mackenzie, we got some news coming out of Brazil yesterday. What can you tell us about that?
We sure do. So, Brazil has approved an increase in its biofuel blending mandates. Starting August 1st, ethanol blended in gasoline will rise from 27% up to 30%, and biodiesel blended with diesel will increase from 14% to 15%. This move is expected to make Brazil self-sufficient in gasoline for the first time in 15 years. About 70% of Brazil's biodiesel is made from soybeans. Ethanol is mainly produced from sugarcane. However, corn based ethanol is becoming increasingly common. Brazil's corn ethanol industry is expected to quickly increase production to meet this additional demand.
Yeah, it's been something that is a bit frustrating that we're getting out legislated by Lula down there. And if you guys have done much following of Brazilian politics, Lula is kind of a massive disappointment for a lot of people in agriculture and the business side of things. Brazil gets it, though. They understand that if they're going to keep producing the size of the crops that they're going to produce, they have to have demand for it. One thing that I'm more concerned about than just the announcement of these small incremental rises higher is, does this provide a foundation for the alcohol to jet market, which is going to be the sustainable aviation fuel, which I'm of the belief is going to be a very substantial item here in the future. We don't want to give that market share away to Brazil. That's something that, as we've learned over the last 20 years, that once Brazil goes out and grabs market share in any kind of product, it gets very difficult to get that market share back. And the only way to win that market share back is through price. With all that being said, we do have some good news coming your way. So let's get the farmers the red meat that they all love and talk about some weather. What do we got going on out there?
So rainfall is expected to be ample across the corn belt over the next 7 days. Our friends at Crop Profit project the region will receive 152% of its normal precipitation, with the heaviest rainfall concentrated in the upper Midwest, specifically eastern South Dakota, Minnesota, and Wisconsin. Nebraska, Iowa, Illinois, and Indiana are also likely to receive precipitation, though rainfall amounts are expected to decrease further south. Temperatures in the eastern Corn Belt are forecast to be warm, while areas west of Interstate 29 will experience cooler to moderate conditions. Overall, the Corn Belt is projected to run roughly 1 degree above normal during this period.
The rainfall yesterday was a real nice one. I got about 3.4 inches of rain here in Eden Prairie, Minnesota, but I'd also like to go ahead and throw out that I grow exactly 0 acres of corn in my little patch of backyard here. Mackenzie, did you guys get some rain as well out there in Nebraska?
Yeah, we sure did. Probably over the last 24 hours, we've received about 3/4 of an inch.
Yeah, we'll take it wherever
Mhm.
we can get it here in June. I mean, we will most certainly take it. And we're going to need it because when we look at the temperatures coming up here, we are going to see some higher temperatures. And the heat is okay if it's being supplemented by the rain, which it appears it's going to be. I am not a weather expert, but I will say that I have been a more than casual observer of it here over the last 25 years. As we are continuing to grow through this growing season, we've had darn near ideal conditions. There is some concerns for this heat, but if we can go ahead and have this amount of rain come on top of that heat, I think we're setting ourselves up for darn near perfect growing conditions here in the Corn Belt. Moving on to some of the more macro things here. What did we hear from Jay Powell?
So, yesterday, Fed Chair Jerome Powell told the Senate Banking Committee that it's difficult to predict how tariffs will affect inflation. Despite softer inflation data and mounting pressure from President Trump to cut interest rates, Powell stressed the need for caution, citing a strong economy and the unpredictable effects of trade policy. While two Federal Reserve governors have indicated they are open to rate cuts as early as July, Powell noted that recent inflation figures are backward looking and warned that inflation could rise later this year. Meanwhile, President Trump has increased his focus on the cost of elevated interest rates, arguing that they are driving up the government's cost of paying back its debt.
This is a tricky situation. I don't know if it's all for theater or if it is a real rub between the two, but Powell and Trump do not care for each other. And part of that is kind of okay. And I think it's actually the way the system was designed. I don't know if you've taken your kids out shopping or anything, but I had to go buy my son a couple of pairs of shorts because he outgrew his ones from last year. And inflation at Shields is certainly real. I don't think that stuff, because of the way the government goes about building that methodology, building that data, it's so backward looking that what I bought for him in mid June isn't going to show up until later July. And that is something that our analysts are talking about at StoneX, which is that this is going to have a delayed impact and that this inflation number is going to show up at some point. And if you lower interest rates in the face of rising inflation, that doesn't really help your case. What doesn't also help our case is the ridiculous amount of government spending that we have, which creates debt, which then, if we have high interest rates that we have to pay back on that debt, we end up in this vicious cycle. It seems like doing some cuts at the government spending level would be a more rational decision, but that isn't something that seems to be top of mind with today's leaders. Moving on to ethanol production, what did that report tell us yesterday?
Ethanol production declined last week, but remained strong. Weekly output of 1.1 million barrels per day was down 2.5% on the week, but up 3.6% versus the same week last year. Ethanol stocks remain well above seasonal levels for this time of year, totaling 24.4 million barrels. The print was up 1.2% compared to the previous week and up 4.2% compared to the same week last year. According to Reuters data, U.S. ethanol production margins have softened over the last week.
The ethanol industry is always one that is in flux. And when we look at how the charts play out, and if we look at how this business works, we want to focus more on trends than we do week to week data points. If you look at this combination, and I've been looking at this set of charts, and so I'm comfortable with this set of charts, and everybody kind of has their own format that they like to look at. And so I've been using these for about the last 20 years that our market intelligence group puts out. And we can see that stocks are rising in the face of a production cut, which is typically a bit of a concern. But when we look at the bottom left-hand corner there, we look at what demand has done here in the last couple of weeks. That is something that, with the week-to-week data points, and when you can see how volatile that demand statistic is, you don't want to put too much into one data point or two data points. You want to look at more of what is the trend. If we keep demand for ethanol down, as we are seeing it right now, that's going to be an overall negative to the complex. But I want to say it's a little bit too early to go ahead and call it a trend because, like I said, two data points don't make a trend. But if we don't fix this soon with ethanol demand, we are going to have ourselves an issue on the ethanol front.
The
US
U.S.
dollar. Oh,
Yeah,
sorry. Go ahead.
no, go ahead. The
No,
US
no.
dollar remains under pressure as geopolitical tensions subside. The ceasefire between Iran and Israel, announced earlier this week, caused the dollar to further ease on Wednesday. It also pushed oil prices lower, which removed one of the key supports for the dollar. With Middle East tensions subsiding, the dollar's direction now hinges more on domestic factors such as U.S. economic data and Federal Reserve policy. Following recent comments from the Fed, markets are pricing in around 60 basis points of rate cuts by the end of the year. The US dollar index is down nearly 10% so far this year, hitting its lowest level since March 2022.
With currency trading, you have to always consider that you're always trading one thing for another. It's not a simple transaction because there's so many other factors involved. And when we look at the dollar index, we need to recognize that it is a basket of currency, of which I believe about 52% of that basket of currency is versus the euro. when we're talking about agriculture, we more want to focus on how is the US dollar doing versus our currencies, our competitive or partner currencies, which would be the Mexican peso or the Brazilian real. But the headline number of the US dollar seems to get more press because it's a little bit easier to talk about. The situation with the US dollar, in my opinion, is that it is not super friendly to the who would be the, I guess, the longs on the dollar side of that equation, because there's some concerns about the lack of fiscal responsibility. And that is something that is hurting a little bit, but it's also something that it is a comparative transaction. And when you have good things going on in another economy, and so there is some economies in Europe that are doing quite well, and so therefore the euro is gaining strength. And due to the strong amount of the high percentage of the U.S. dollar, uh, of the euro involved in the U.S. dollar basket, that is something that is probably making this look worse than what it is. So we don't want to put too much weight into the US dollar being weaker. However, if we are in the export sector, which we are here in agriculture, a weaker US dollar is generally favorable to our export situation. What's happening in livestock over there?
So cattle futures were mixed on Wednesday. Live cattle were 70 cents lower to 37 cents higher. Feeders were $1.37 lower to 15 cents higher. Box beef prices were also mixed yesterday. Choice was up 69 cents at 394.94, while Select was down $6.12 at 376.29.
I feel like this is the first time in a long time that you haven't said record in something. So
yeah, that box beef, it was really headed for the moon, and we'll probably see it jump a little bit more, but maybe it leveled off for a little bit.
Yeah, pretty amazing market that we've still got going on there. Again, watching the trend, and the trend is positive. But here at 535, we have corn still up a little bit here, a couple cents higher in the December contract. We've got November beans up just a penny and 3/4. D wheat is trading up penny and a half. Minneapolis wheat, not even a penny higher, and Kansas City wheat is probably our leader, I guess I would say, up 2 3/4. When we look outside the ag marketplace, we've got energy higher, we've got equities is higher. I don't want to say energy is a lot higher because it's a little bit more stabled out, with crude oil trading up 20 cents at 65.12. Happy trading out there, everybody. Have a good day.